Well, thank you, Ansha. And thank you, Simon and Walt, for setting the context and for providing a holistic overview of the business. So good day, ladies and gentlemen. We will now take a closer look at the Southern African business. And as we reflect on the past year, we do so with a deep sense of responsibility and commitment. Our high-severity incident program is delivering results, which shows a decline in serious incidents, which is a testament of our team's dedication and the effectiveness of our targeted interventions. At Natref and Sasolburg, we are improving asset management practices, setting the stage for long-term operational reliability and competitiveness aligned to industry benchmarks. But Secunda is the subject of this deep dive, and more specifically, the key aspects that impact the performance. These are improving coal quality, restoring gasification performance, and optimizing our cost base. All of this is done to achieve our ambition to be competitive, delivering at a nominal oil break-even price of $50 per barrel by FY2028, which includes capital. So let's take another look at the Southern African business, and I'm sure you know the Southern African business well. This business is the cornerstone of Sasol. It is characterized by significant value, and it's of strategic importance to the country. The key features of this business, it's in an advantaged location in the industrial heartland of South Africa. Its diverse and integrated portfolio enables us to optimize across the entire value chain. It's a leading brand with established local and global customers. This is not just a good business, but a strategically advantaged one with immense potential. We recognize that our recent performance has not been reflective of this potential, leading to questions about its future. But I must state, and I must clarify, that this is not a broken business. We are dealing with a specific set of issues that we understand, and we are working to address them. In the next section, I will outline our plan to restore business performance to historic levels. So unlocking value in the SA business is really anchored in feedstock, operations, and marketing and sale, with feedstock and operations being the largest lever at our disposal. And as we know, Secunda Operations, operating at full capacity with affordable, high-quality coal, represents an exceptional business. But a 9% reduction in throughput has a significant impact, which has really prompted us to launch an extensive investigation to identify and understand the causes leading to this level of underperformance. And the primary causes are escalating cost and a decline in our coal quality. The sustained decline in coal quality has adversely affected gasification. To address this, we are following an integrated approach spanning mining and our downstream facilities with a focus on targeted reliability interventions to reverse the trend. And finally, for the overall business, we are managing costs below inflation to enhance our profitability. So let's dive into the specific areas. And let's start with mining. And it's important to note that for many decades, the mining business benefited from favorable geology, which has shaped a business that could deliver the volumes at competitive costs. However, as mining develops reserves further away, we encountered complex geology that required proactive mine deployment and/or reactive beneficiation. Unfortunately, our response to these changes has not been timely. Yeah? And while current benchmarks indicate that we are one of the lowest cost producers of coal in South Africa, the true cost of maintaining quality has eroded one of Secunda's key competitive advantages, and that is inexpensive, fit-for-purpose feedstock. The poor quality of coal has a dual impact on our business. I think firstly, it reduces the gas yield at gasification, meaning we produce less gas per gasifier. It damages equipment, leading to longer downtimes, and therefore fewer gasifiers available for production. In response, we have shifted to a quality-first approach, balancing quality, volume, and cost to restore Secunda's competitive advantage. I will now unpack each one of these mining levers. So starting with quality, we have commenced the construction of the destoning project. The successful delivery of this project is the most significant lever to improve coal quality. In broad terms, the scope of this project is to retrofit and repurpose our existing twist-dry export plant to destone to Belisha run-of-mine and 30% of Boschi-sprayed coal. Right? And this combined feed will be fed to gasification to produce pure gas. This is a low-risk, cost-effective solution that will come on stream by the end of this calendar year. We are also testing real-time quality analyzers that will allow us to make in-time decisions to improve our blending capabilities. Together, these improvements represent a significant shift in the operating philosophy to improve our coal quality from a blend composition and variability perspective. Moving on to volume, how we address the volume problem. We are resetting selected mining fundamentals to meet Secunda's demand by increasing drilling for our improved reserve interpretation. This will enable effective mine planning and the timeliest establishment of the required infrastructure deployment, which is supported by our current capital plans. And with the improved geological understanding, we can proactively plan stoneworks, ensuring flexibility in mine execution. But this approach still requires us to supplement with competitive external purchases. Proceeding to the cost of coal, here our goal is to maximize production from our own low-cost sources, leveraging our operating efficiencies. And we've implemented a few operating efficiencies, like the walk-on, walk-off operations at a few of our mining sections. This initiative employs 2 continuous miners per section to minimize downtime. Coupled to these efficiency improvements are actions to address the competitiveness of specific internal sources. And here, trade-offs are considered to substitute or supplement volumes with competitive external purchases. Moving on to our long-term supply. Here we are developing solutions to extend supply beyond 2030. As we face depletion of existing collieries, like Isubonelo, will cease deliveries by December 2025, and our Boschi-sprayed operations is expected to close by 2030. To address this, we are following a multi-phased approach to evaluate both internal and external supply options. These include developing our own reserves, procuring external coal, and forming strategic partnerships to unlock future supply. we have shortlisted several potential suppliers, and we will compare internal and external options to determine the most reliable and cost-effective path forward. Yeah. As you can see, we have translated our action plans into a comprehensive and realistic roadmap with key milestones. Some of them have been achieved. As you can see, some are about to be achieved, and others are more in the long term. I will highlight a few. In August 2024, we established a world-class integrated quality management center. And if we were to combine this with our real-time analyzers, this will be a key operational lever for our quality-first approach. Simon mentioned we took FID on the destoning project, and we expect beneficial operation by the end of this calendar year. And in October 2028, we will finalize long-term coal supply options. Yeah? Now, moving on to gasification. With the destoning project coming on stream, it's important to note we will see an immediate and measurable increase in gasifier yield. Yeah? Though, I must state that production levels will still be limited by gasifier availability. Yeah? And this is due to longer gasifier maintenance durations, which were caused or are caused by higher wear and tear rates associated with poor coal quality. And we've seen outage durations have increased from 65 days to 135 days per gasifier. Yeah? We have a fleet of 84 gasifiers, and under normal circumstances, we expect 75 to be online at any given time. However, over the past 4 years, this number dropped to 65 to 70 gasifiers, representing a significant drop in our production capacity. The good news is we are working on the restoration of our gasifier availability, right? And we have a set of levers that we are working on to achieve this. And starting off with the first one, we are taking a risk-based approach to restoring integrity and reliability. We've deployed new repair methods. We've also optimized our contracting strategies for competitive outcomes. We've focused on productivity, and we've added additional but temporary resources to catch up on the maintenance backlog. These interventions, combined with improved coal quality, will result in an average maintenance outage duration of 65 days, which is kind of where we were in the past in terms of outage durations. In the graph, you will see the correlation between sinks, gasifiers, and total production. It shows that over the period FY22 to FY25, there was a step increase in sinks with a decrease in gasifier availability. That resulted in lower overall production for Secunda Operations. Yeah? I think it's over here. You can see it. Relative to where we were prior to that period. But that being said, with destoning and the increase in gasifier availability, we expect a ramp-up of Secunda production to be more than 7.4 million tons in FY28. Yeah? This particular slide is an illustration of our recent coal quality efforts, where we performed a test run We isolated high sink sources, and if I could explain this, what this represents, the puzzle pieces, is basically a coal blend, which consists of coal from different sources, and we make it up to a recipe to feed into the gasifiers. And in this instance, we isolated high sink sources, and we replaced it with low sink sources. What that demonstrated is, on the graph on the right, you can see the period before the test run, what the gasifier yields were, and during the test run, which is the darker blue bar, what the yields were during the test run. This was done over a 14-day period, and if we extrapolate that over a year for 75 gasifiers, it confirms that we can produce more than 7.4 million tons of product out of the Secunda facility. So the destoning investment, the focus on gasifier availability, will restore Secunda's production levels to where we want it to be, more than 7.4 million tons. Yeah? We move on. Let's move on to the next slide. So the next slide is focused on cost. And here, Walt has covered some of this, and I will talk to some of it as well. And our business is one that's characterized by high revenues with low conversion to free cash flow. Yeah? And this is due to our cost and capital structure. We know this, we recognize this, and more needs to be done to increase this conversion to cash. Our recent history demonstrates our ability to manage costs below inflation, and we aim to build on this. So going forward, we will focus on the efficiency and the cost effectiveness of both internal and external spend. We will keep cash costs below inflation by targeting a cash cost saving of between 8 and 10 billion rands by FY2028, whilst keeping our capital expenditure below 27 billion rands. We will ramp up renewables by 757 megawatts, this in an effort to lower our increasing utility costs. And we will focus our efforts on assets that continue to add value to our portfolio. Our approach to capital efficiency is really anchored in the following principles. Sustained reduction in sustenance capital, whilst ensuring no compromise on equipment integrity, safety, operational stability, and reliability. We'll take a closer look at project scope optimization, and we will also improve our project contracting strategies. We believe by leveraging these measures, we are well positioned to optimize our cost base. Yeah? So, in conclusion, our focus in the Southern African business can be summarized as follows: deliver on volume growth and margin upliftment, drive disciplined cost reduction with targeted focus on capital efficiency and both internal and external spend. This approach ensures business resilience at a nominal break-even of $50 per barrel by FY28. We are confident that these interventions will position the SA business as an exceptional investment case. I will now hand you over to Sarushan Pillay, who will provide insights into how we aim to grow and transform our business. Thank you.